See, it's all good.
All right. Hi, everyone. Welcome to Before the Bell with Purdia Capital and our co-host, Steve. Hi, Steve.
Henry, happy Friday.
Thank you. Thank you. Hi, everyone. Welcome to the show. Guys, things first. First things first. It's a educational show, entertainment, no financial advice whatsoever. So please do your own thinking. Don't take anything we are saying for granted. And yeah, only do the things you yourself have developed and tested. Always take care of risk management. And yeah, let's start the show. Steve, how is it going? What are we up to today?
It's an overreaction week, it seems like, Henry. I will definitely show that in the charts pretty soon. And what happens during overreactions, it's gaps, our favorite term, but we will get into it soon. It's like you said, yeah, first things first. Let's get into the news, what's upcoming for today, just so we are aware. You guys, we are prop traders, we're intraday, so we always need to be aware, always need to be in the know of what's upcoming. And I know it's repetitive, I know it happens every month, but a lot of times it can slip up, we can forget, enter into our bids, and then all of a sudden there's a sudden spike, and you're thinking, oh no, it must be Trump, it must be...
It's always Trump. If you don't know what's happening, it's always Trump. It's always...
But naturally, you think you don't do your homework, you don't write down into your notes, okay, the upcoming news, and you're thinking, oh, it's a ceasefire, it's Trump, it's something, and look, boom, it's Michigan. And what do we have today? It's Michigan. I would say it's around 50-50 whether we get a big reaction or not. But considering, the quarter, how, if it's coming in hot or if it's a total miss, there's always going to be some sort of reaction, whether it's medium to high term, but it's on the red calendar news, so we're going to talk about it. And it's also interesting as well that have you seen, because the keyword here is revised, have you seen this before, Henry? It's indicating that's like a revised.
Yeah, not so many times, but it happens from time to time.
Happens. Okay, yeah, because Henry has more experience in this field. It was just
no, but it's not often. Also, it's really doesn't happen that often, so I have to say.
Yeah, just like label that. But this is the main newsprint coming up, you guys. I'll just quickly talk about what it could mean, how it could impact, how it could affect NASDAQ going forward. And also at the end, we have not only once, but I see a few times that Trump is speaking. Some sort of events coming up. I see also at about noon, I know actually lunchtime, I see him speaking. It says Trump speaking, as well as 1:30, some sort of coalition event, signing time. So it says Trump signing time. So we all know whatever he's signing, whether it's good or bad for the market, there's going to be some volatility. But it's end of the week, you guys. It's Friday. When he comes on, you shouldn't be looking for trade ideas anyway, whether it was a win or loss, close the books, be done for the day, be done for the week. But yeah, let's quickly just get into Michigan. That's coming up. This is 30 minutes after New York Open. So of course, our first major impulse will be the Open of New York, largest volume entering the market, and then the revised Michigan sentiment. What could this mean? Anything, well above expectations, meaning consumers are breathing just a little easier thanks to early month, some gasoline relief. Also some gains, among the demographic with American workers. Also could mean, a little easier on their wallets, their jobs, the road ahead. That directly fuels their consumer spending, and we know who is the biggest consumer in the world, and customer of China is the US. So that's why a lot of times this consumer spending print is important. And the bottom line, so modest green flag for growth, and also the kitchen table is not so painful as well. So just be interesting to see that number and how the market reacts, of course, whether bullish or bearish. I will mark out that pivot if it's a strong, strong reaction. If there's if there's nothing and consolidating and the 15-minute is not showing a clear push, then I won't mark it up. But for now, I have my current level marked up, and I'll get into that soon and what that means. But anything, Henry, you want to say before I get into the levels and why I marked it up this level at around 29,511? But let's just let's make it a whole number. I like the whole numbers a lot more. It's cleaner on my eyes.
Yeah, let's before I dive deep into, let me quickly show something. And we've been talking about it last week or even 2 weeks ago. I just want to show it. Wait 1 second. So basically, all the euphoria and everyone being super excited about the deal and the negotiations between the US and Iran, right? And we said right in the beginning, upfront, it's not going to be a smooth ride. It's not going to be a smooth ride. So many things have been already priced in. So now everyone is watching, like, all right, will they be able to find a deal at all, right? At what conditions? Will it be satisfactory to both sides? How will the whole Lebanon-Israel thing play out? Will they find a solution there? Because as long as there's no proper solution, I don't see a deal between Iran and the US being properly and long-lasting, right? It might be like ongoing here and there, closed, open. But we said it, I think, 2 weeks ago, that guys, be aware of those kind of things, that negotiations might stall, negotiations might be revised. We might see many rumors, many different parties involved, right? Many fake news, or however you want to call them. So be aware of those things. And we saw it, I think it was also a clear demonstration over the last couple of days, actually the whole week, all the back and forth between like, yeah, they said this, no, we didn't say it, yeah, no, but we clearly said it. You don't know what you're talking about. No, it's closed, it's opened, it's partially closed, it's whatever, right?
Okay.
So 1,000 reasons. And now again, a headline just came out: US Iran Hormuz line is to prevent military escalation. Again, down talking it. So the markets stay relaxed, but you can see it actually here on the VTI USD. So it's basically an oil price that the market is reacting to it. So oil is reacting to it, and the market is nervous.
Oil's below 70, which is interesting. It's sold off.
I mean, they're trying to push it down as hard as they can, right? But I just want to make a point. Be aware that anything can happen. It's one big headline is all it needs for the market to go completely in a different direction from where it went, where it's supposed to go. So always have a stop loss in place, have proper risk management. We'll talk about this later. And just for that, let me quickly, I don't want to make it too long. It's Friday. I know everyone is already with half.
But just before, Henry, so what do you think about the timing of all this back and forth, the ceasefire? Because remember, we are in the summer months. And does it surprise you that we have no deal in the summer months? And then, come September, come October, it would make much more sense to be.
Yeah, I mean, I think they're a bit. Steve, are you there? Are you frozen? No, you're there again. Okay, it was just a little bit stuck. You stopped at it would make more sense during the autumn.
Like wouldn't it make more sense where, yes, we do chip chop a little bit? It's the summer months, things are slowing down, where the market, it's all about timing in the markets, and then once the September, the October months hit, where the real volume comes in, wouldn't it make more sense where the finalized deal comes in then instead of right now because of the timing?
I mean, the point is that there's no easy solution to this whole case, right? I mean, this whole Iran topic has been on, like, I don't know, longer than I started in the markets almost 20 years ago, 18, 19 years ago. So, and the whole thing has been going on for much, much longer. So, and they never managed to find a proper, long-lasting, sustainable solution to it. And it's many industries start to buy the oil for the winter right now in the summer.
Yeah.
And those kind of things. So I think this also plays a role, a part of the whole storage issues that they had, that they were running super low, not only low, but super low. I think many industries also need this cheap prices in order for the prices during the winter to be low, right? And I think there are so many parties involved, so many different interest conflicts. So I cannot say if it makes more sense to have the negotiations right now. I'm even not sure if they considered all of those facts, or if they just have been watching the oil reserves going basically running low, and they were like, all right, we need to do something. It needs to stop. We need to find way out of the situation, and that's basically all they have been thinking about. And it gives them an exit strategy from the mess, right? It's basically gives them a exit.
And US is overtaking Saudi. They're the biggest exporter of oil and gas right now. So they really ramped up production in Texas.
Yeah, I mean, it's I think when Trump last year, no, 1.5 years ago, when he was running his campaign, I think it was one of his slogans used to be a drill baby drill, right?
Yeah.
So he just makes his commitments true. And yeah, no, all right. It's just like it's Friday. It's let's not make it too long today. Let's just dive into NQ. We've been also talking about this. Let's quickly. Okay, our levels look messy. I think I will start working with another program, so I have the long-lasting levels there, and then the intraday ones on the other program, so it doesn't mixes things up too badly, because it looks really messy.
However, it still looks much cleaner than having 100 indicators on there.
Yeah, that's true.
We've all been there, Henry, with the 50 EMAs and 100 SMAs.
I mean, I'm a big believer in those, like 50, 100s, and 200s on a daily or weekly level.
Let me revise. 50 different SMAs.
That's what
I meant. That's what I meant.
Definitely.
Yeah. Because I'm a big believer too, with SMAs and EMAs, a few, but not 50.
Yeah. It's like the what is it, like the rainbow indicator and stuff like that. It works if the market is trending. It works perfectly, right? But I mean, the market is just only trending like 20-25% out of the time. So in the other 75%, you basically have a mixed bag. Yeah. All right, guys. So what do we have? We have this big support area at 28,550, still holding true. We bounced off our second tier. Actually, no, we did not touch it, but we are on our way towards it. It's our 2950, I would say. So this is for me personally, if I would trade, what I'm not doing. I'm just saying here because I'm busy with Purdia, don't have time for trading. So if I would trade, this would be the level I would watch out closely in terms of possible resistance, follow up through volume coming in, liquidity coming in, right? So those kind of things. And it's always good to have levels to watch, to be aware of. And on the other hand, on the upside, I still, for me, my personal opinion, 29,800. I'll make it a round number. So this level would be also interesting for me. Basically, support, resistance. So as long as we're sitting between those two, that's basically my range, right? So I want the market either to close above for a long scenario or close below for a short scenario. And otherwise, if it sits somewhere in between, or actually also bouncing off for a long or a bouncing off here for a short. So those 4 scenarios I'm looking for. And many people from back then when I've been trading have been always saying like, yeah, but then you don't have that many trading opportunities. And I was like, yeah, and what? That's the whole deal, right? Because I'm not only watching NQ, I'm also watching ES. I'm also not. I would watch If I would trade, I would watch ES, I would watch Dow, I would watch Russells, I would watch gold, silver, right? And this gives me plenty of high probability setups, high probability opportunities. So I don't want to be involved in low opportunity environments. I only want to be involved in high probability environments where I have a good level. And again, I repeat myself, I already stated a couple of times, I don't care where the level is coming from, because you can have you only trade from round numbers, let's say 29,000, 30,000, 31,000. If you have a strategy and you designed it and you traded it and you know the exact setup, you can make a number up. You just repeat it over and over again. If you have back tested it and you see an edge in it, then you can trade upon it. It doesn't matter, right? You can take 100 moving average on an hourly chart and trade from there. It doesn't matter too. If it has a probability to it attached that is profitable, you can take whatever level you want. So this is part of my strategy: support and resistance, demand, because for my personal style, I grew up with it, so I'm kind of see them blindly and
And
can
it still
find them,
works.
and it
Still
still works.
perfectly. Yeah.
So at this point, but I just want to say, you don't need to take my levels. You can take your levels. Mine is like, I would say, the most common ones, right? Support, resistance, and then you go on a smaller time frame, from the daily chart to the 5-minute chart, or 3-minute chart, 10-minute chart, whatever you're watching for. Oh, sorry, and you zoom in there, and then you have your other, like, this is your idea, and the smaller time frame gives you the actual entry, right? Whether proper risk management in place, where to place your stop loss, and those kind of things. So, for example, here, what do we have? Okay, we have the low. So I would like to see this overnight low getting extended. So the market drops below, cannot follow through, bounces back, and then from there I would go for a long scenario. This would be like my long setup on the side. At the same time, the big level I'm watching is 29.50, right? So if is not happening, then I might be watching to the short side. Market goes lower, comes back to this overnight low, bounces from there at 150. This would be a possible short scenario. Or the market goes even lower, takes out the lows here, bounces back, comes back, and this would be my long scenario. So you see, guys, I'm not stuck to one scenario, and this is what I think, and Steve also thinks, that we both think is the whole idea of this stream and of why we are doing it. We're trying to showcase you different styles, different approaches, and there's no right path that many people want you to believe, that you need to trade in a specific way, because you can make almost any like style happen. You just need to do it often enough. You need to backtest it. You need to train it, proper risk management, size management, and then you can make all kind of different things work. And yeah, Steve, what's your take on this?
Yeah, it's like you said, it's not about the right path. Or you could say it's more about the safe path. More about the safe path, the survival path. Pre-calculate, and it's not hard, you guys. Knowledge is free online. Calculators are free online. Calculate your path to safety, how you can, either if you choose the challenge phase, see your risk to drawdown, see how many attempts you need that would keep you above that buffer, and start chugging along into the profit target. But if you want to skip the challenge, there's the instant accounts, right? Sure, a little more, but you skip that evaluation phase. But same kind of concept, same mindset, where you calculate your buffer and your safe zone, where you can continuously trade. And we're always practicing, we're always learning. Just because I found my setup years ago doesn't mean I'm never evolving, because you have to evolve with the market. Like I'm not. There's some months where I'm not holding as long as other months, because you have the feeling, the markets are a little choppy, not as trendy, or there's more overreactions. And also, I'll get into the overreaction, what happened on Wednesday and how we closed that overreaction yesterday. We didn't have the stream, but we can have a little recap. But I'm evolving, because every day there's a new scenario going on, and you need to zoom out, draw your levels, don't overreact with the market. If it pushes, if there's a setup, there's a huge gap up, wait for the retest. Or if there is no retest, then look for other angles or other assets to trade. There's not only NASDAQ. There's ES, Dow Jones, and Russell 2000. Mainly, I use those for analysis, but sometimes I like to not hedge, but not if let's say my total contract size is 15 micros for the day, because that gives me a good risk scenario in dollar form, but I don't feel 100% comfortable in NASDAQ, then instead of putting the whole 15 micros, then I take a percentage out, let's say 20-25%, and put in ES, because I see ES trending a little stronger. So that's just my rotation.
I think you just mentioned one thing that I want to highlight, and that's basically, you mentioned that 1 month you might not hold as long as you would usually do, and this is the importance. Maybe we can do another specific video, not a live stream, but a specific video in this case. It's basically also proper tracking, right? So you're able to compare different months against each other and see, is the strategy overall working, right? Because too many people are stuck with one style, with one strategy, and then they lose their edge, or their edge goes again away because the market is changing. Yeah. And then they're stuck in one thing. Yeah, I'm just in a drawdown. And you look at the numbers, like, mate, you've been like 200 losing trades, and giving the images we have from what you have done, it's a proper execution. So it's not a drawdown anymore. Like, you really need to test if the strategy is working at all, right? Because many people who are not long in the markets, they overlook the fact of, or don't know the fact, better say, that sometimes strategies just stop working.
Yeah, exactly. And never be fixed on a single RR, risk reward. That's the issue. Like, I must have a 2-to-1, 3-to-1. Of course, that's much more attractive because you don't have to be right all the time. And I'm not saying to have a higher RR, 1.5, 2R. That's fine. Just Henry sees it. He sees stats. He sees a lot of profitable traders that higher RR, and they only need to be profitable 40 to 50% of the time. However, they're not always fixed on that amount because the range is different every day. I just said.
And there's also one thing. The smaller your time frame, and therefore basically, as a scalper, you can afford to have much higher RRs, right? Because if you risk 10 ticks and you make 50 ticks in the current range, in the current scenario on NQ is nothing. Yeah. But in order to get that, you really need to know your markets. You need to know the time of you're trading in. You need to know your time frame. Is it like 20-second charts, 1 minute chart? And then
don't scare me, the 20-second chart.
No, I'm just saying, I'm just being realistic, because and then the market gives you plenty of opportunities, right? To go for 50 ticks, for 100 ticks. But we're talking about hardcore scalping here. We're not talking about like risking 50 points in order to make 150 or 300 points. It's a different game, right? Because then the market gives you much more zigzags. And maybe one thing about being dynamic and flexible. I worked with some guys, and they always had their take profits. Let's say this is the low, overnight low, right? And they had always like sitting at either directly at the low or underneath. They were like, the market always goes there, and then they would basically take their take profit. I was like, but many times the market doesn't go there. The market the market basically makes a U-turn 20 points above, and you have been sitting for, I don't know, like 6 hours in front, and you make zero profit because you're too stubborn to either trail your stop, either to trail your stop your profits, right, or to take a partial off because you wanted to get the whole position in one thing. And actually, for me, when I've been trading full time, one thing that made really difference once I started to work with multiple take profits, not only 1, 2, but basically I'm talking about like 4 or 5 different take profits levels. And this made a big difference also psychologically, because then you're much more relaxed. And I think at one point when you're really in peace with yourself and you accept that it's not about maximizing your upside, but more about reducing your volatility. Because if you have, let me show you. If you only work with one take profit, and even if you're profitable, it can go up like this, right? It still goes up. If you take the median, it still goes up. but it's like much more nerves involved, and it's much more psychologically challenging.
Volatile, yeah.
Yeah, but if you take more, if you take more, many more take, sorry, other color. If you take smaller take profits, you will not get the spikes. First of all, an overall P&L, and you will not, maybe like the curve will probably not look this steep. It will be like, I thought I changed the color. Apparently not. Blue. Okay. So you will get a curve that is underneath, but your overall volatility will also be smoother. And this smoothness is actually that made me understand that for the long-term trading, once you smooth out the volatility of your trades and the overall volatility of your P&L, this is how you're a much more relaxed trader, because then you don't care, because you're not attached to it, to the specific outcome of the trade, right? Because you don't know how far it will go. And so, for example, if you're talking about here, if you only have one take profit, let's say 100% sitting here, and you have been sitting your whole day, at one point after 4 or 5 hours, you will get super nervous because you're annoyed of sitting the whole day inside a trade that might be like bouncing back and forth, and you might do some, like, you will start to see ghosts where none, right? And then you will be like, oh yeah, this is actually a resistance level, so if it breaks above, and then you go long, right? Because it was not able to to break through, even though your short scenario might be still intact. But then you start, because there's a thing that's called decision fatigue. When you made so many decisions, or if you're in a trade for such a long period of time and you watch it going back and forth, and the worst thing you can do is not watch an overall points or ticks, but watch the actual dollar amount, right? And the bigger you trade and the higher the dollar amounts get, the more complicated it gets, because then your brain automatically is thinking like, oh, with this amount, it's like a monthly salary, yearly salary, I can buy this, I can buy that. So therefore, my tip is always focus on points or on ticks, one of those two, right? Or pips if you're a forex trader, and let the trade play out. And then let's say you take, let's make it easy. You take 1/3 out here, you take 1/3 out here, and the other one you either trail or you have a stop further away, right? At the target further away. And this gives you the opportunity to be super relaxed and let the play and let the trade play out, right? Because you don't need to be so focused on one specific outcome, but you rather accept the overall trade itself, and you're like, okay, I don't care, I do my thing, I take the profits as they come, and you're not forcing the market behave in a way how you think the market needs to behave. But yeah, what's the take on this, Steve?
No, it's exactly it. And remember, we're not, that's the whole term, risk managers. Risk managers. We're not setup managers, we're risk managers. So create the strategy around how to protect your account once you start entering those bids. Post setup. That's when the real skill comes in. And I'm not saying, not to put the pivots there, but I've had the daily and the weekly pivots on my chart. It always made my mind go crazy, because then, naturally, I feel like you're like, oh, it has to sink through, it has to break through. And you're thinking, oh, yes, and Dow, they haven't taken the lows yet. NASDAQ has to take the lows. The market doesn't have to do anything.
Anything, yeah.
Nothing. You just need to go, So
There's
that's why,
actually,
yeah.
Yeah, no, finish. Sorry.
No, I was gonna say, like those major pivots, the daily, the weekly, it makes my mind go crazy. If I have that on my chart, the current range of the market, and I play my nice 1-to-1. Sometimes I like to increase my RR, but I just play the current range of what happens after New York. And if the current range indicates to me that we should get a push lower, and if there's a daily pivot there, there's a daily pivot there. But for me, it makes me much more relaxed. Oh, and we got New York open right now. We got the bell in New York, Henry. We missed it again, but we have the bell coming up right now.
I'm sorry.
No, it's all good. No, we got the open.
No, but never mind. Just one thing. Like overall in trading, the actual setup is just 10% of trading, right?
Yeah.
Like it's the setup itself, it's just 10%. And there are actually many studies on that in terms of books sold, courses sold, YouTube, podcasts, whatever.
Yeah.
And the irony now is that 90% of the traffic is actually focusing on only 10% that matters.
Yeah, exactly.
And that's but it's true. And this is actually like the saddest thing for me, always to watch over and over again, because when you talk with people, you're like, all right, what's your trading plan? What's your trading strategy? How did you backtest it? Did you walk forward it? Did you stress test it? Are you tracking?
So minimal.
They're like, yeah, no, and they're like, I don't know. They're like, I don't know how many layers there are. There are probably like 20, 30 layers that you need to be aware of if you want to be a consistent, profitable trader. And now you think like, all right, so 90% goes on the setup, and the other remaining 10% is basically of attention is split it across 30, 20, 30, 40 topics, right? And gets almost no attention. That's always the ridiculous part to me. Yeah.
So maybe that's what people should start backtesting, is play out like these simulations or the scenarios where, okay, if you took the setup, okay, after the fact, what do you plan to do? And like Henry said, like, the brokers, prop firms, they're not making money on your backtesting and prior to the bid, prior to entering. So on the setup, you're making money once you enter the market and you overtrade and you're feeding into the commissions and the fees. So remember that. But there's not too much, there's not enough emphasis on that. But yeah, we can definitely get into that and run deeper on another day. And we got New York Open right now, opening right at the bottom of the range. Very interesting.
Yeah, let me quickly make some an intraday possible setup strategy, right? Yeah. So we have the overnight high here, swing high. So that might be a possible double bottom, right? If we cross above. So what I would watch for is a possible extension of this overnight high, and then markets coming back for a short scenario. If we manage to stay above, break above, and then go higher, it's a long scenario. This is like if we get up there, right? We have the trend line here. And for me personally, as long as this trend line is still intact, it's a short case in my opinion, in my style. Mm-hmm. For the short side at the current levels, it's basically taking out the swing low from the overnight session. And then, as I mentioned here, those three scenarios. So especially now with the open, I would prefer just to sit on my hands and let the market dictate what it has to offer in terms of liquidity and volatility, right? So we have Friday, week's end, the overall trend has been downwards. So we had sell-off, like bearish range, sell-off, reaction, sell-off, pullback, continuation. So I see it this way. This might be a bearish flag, for example, a possible bearish flag if we break below. And in order for a short signal at this bait, I want this area to be broken, 2950, to be broken, and then going down. This would be a possible continuation pattern. And otherwise, I would say a possible projected move would be this area from the breakout, basically.
Yeah. So it'd be that reaction gap into the downside. And there's no surprise of this move, but then again, I'll speak about this later.
Yeah. Let me quickly take a look at ES. So what do we have at ES? I mean, it's similar, right? Looks really similar. So you can basically copy and paste this setup. But again, especially during the open, I'm not a big fan of trading directly the open or around the open. I'm not. I don't know why, but trading news was always a better strategy for me when back in the days. The trading the open, it's always. I have the feeling there's so much force at the open at each direction. It just doesn't give you an edge in terms of proper risk management and proper stop loss placement, because it can hit you completely randomly anywhere where you think it's far away, and then you look at the big loss directly at the start of the session. And so therefore I rather wait, let the market show me its hand, how it progresses, and then yes, you will lose. Maybe if it goes your way, you will lose one move, you're losing nothing. It's basically just FOMO, right? At this point, FOMO and greed that you have were not part of it, but people they think to people always forget that only because if you're watching it and it was a clear move, they forget to evaluate the other 100 times where it was like 90% of the time not a clear move, and the market chip chopped everyone around and then went its way, right? The people always forget to watch, take a look at those ones. Let us quickly take a look at SpaceX, our friend.
Oh, our good friend. Still at balance.
Still at balance, I mean.
Still at even. Break even.
Yeah. But you see, we talked about, right, that this IPO open area, 150, might probably be of interest because many people might get involved. And so, yeah.
But it's the same thing, Henry. It was an overreaction on open, and now it's come down to balance. That's all.
And again, where was a good trade? Waiting for the market to showcase where it wants to go, right? And so there were some really good opportunities if you would have traded this. Actually, I'm looking forward. I mean, it was stated at the beginning of the year that the CME is planning to launch stock futures.
Yeah.
So I'm really excited actually about this, how it will finally look like and how much volume we will see there. And it might be also for us super interesting to talk about going forward, because then we will have many more markets also to trade and have a look at it, right?
Yeah, it might be good, it might be bad. I just mean from, because you see the opportunity, you see how stocks, they swing sometimes a lot more volatile than indices themselves. But yeah,
yeah, but by the end of the day, it's all about risk management, right? If the volatility is high, but the move itself, it's clean and it's not zigzagging and not chopping around, then you just all depends on the final contract sizes. And
yeah, and they can be much cleaner too, because I know a lot of traders that they just trade, they run their how do you call it? Because they look for like the stocks that are, they're gapping up during the market, the big volatility. So they see screeners. So they have their screeners.
Yeah.
They only trade the ones that are moving. And with indices, you can't really do that because you're only stuck on like a few decisions. That's why people get frustrated and they go back to stocks. However, stocks don't offer the leverage that futures do on futures do on prop firms and other brokers. That's the big difference. So to trade stocks, you need a lot more capital. But yeah.
I mean, there's always this excuse like, yeah, but with stocks you can, I don't know, you can also trade big, right? And I'm like, yeah, and so what? You can make money on both. You just need to decide which way you want to go and then just stick on it, right?
Yeah. Like how I look at stocks, long-term game. I don't have to worry about once the market's closed on the weekends or after hours. You can relax, never day trading, especially when it's not as clean, as liquid as NASDAQ, so you're never getting the best entry. And we talked about my penny stock days, so never going there ever again on those fills. But yeah,
I think it's an unfair comparison. Penny stocks.
I know. I have the nightmares, Henry. It's gonna stick there forever. I might tell my kids about that.
Yeah. Back in the day. What's a penny stock? But Puppy explain penny stock to me.
Oh.
All right, let's shift gears to market correlations.
Yeah, let's get into it, you guys. We're about 10 minutes into open, bit of a sell-off, bottom of the range of the last few days, or about, I would say, the week. Like Henry said, it's end of the week as well as end of the month. And yeah, we're seeing a little shift in markets where if you zoom out, let's just quickly zoom out and see where we are at the end of the month. Start of, it's crazy, already end of June, how time flies, you guys. But where did the month start? But look at that. The month started right at all-time highs. That's funny enough. All-time highs, trapped the buyers, and now we are getting an interesting print on that candle. It would actually be very interesting just to see how that monthly candle looks. Just for a quick moment, you guys, let's see how it looks. The monthly candle is looking quite bearish, and this is actually our first bearish monthly candle since March of this year, which is not bad. And then we got that bullish reaction, and anyways, let's get back into it. I just want to see it for my personal viewing if you guys are interested as well. But yeah, first bearish close in a while. And what do we have here? What is my focus? I always look at clean levels, you guys. Any upcoming news? We talked about Michigan. That's coming up in about 20 minutes, so to be aware of. And then always smart risk sizing and knowing the range of the day. If we get a strong closure, then this possibly could be my range for my day, and I'm looking for opportunities based on this size. And what is the current size of this range? It is around 180 points. So yeah, it's no small candle. Range has definitely been increasing since Wednesday's spike, and that's also where I placed my pivot. And what happened on Wednesday? This was after market, and there was no news. So I call this...
Actually, they are. Look, I just checked it. It's always a bit hard if we are talking. There were some UAE.
So this was on Wednesday then?
No, I'm sorry. It was just like it was just right now for the market sell-off. So I just want to use the chance. Like 20 minutes ago, there was a warning. No, and that's like actually also the importance of always have a proper risk management, right? Because those things just come out of nowhere and might completely screw with you. So therefore, I just want to make the point, guys. Always have the live news source open and be aware of those kind of situations.
Yeah, so when did this come in? This came in at around 9:18. Let's just mark it out. It could be a possible new pivot, a new line in the sand for me. Yeah, it's right around here. I don't know. I'll have to do a little more research behind it. But yeah, thanks, Henry, for that. Some news came in earlier, but the whole premise of today's recap was the spike we got on Wednesday. Asian session. It was right after the close from Tuesday's trading session after our last stream. And, we were off last few days, so we weren't able to talk about it, so I want to talk about it right now. And just look at it. Let's say, cut out what happened out yesterday. Huge overreaction. How many points was this? And on no news as well. Close to 500-600 points. Let's say 600 points. There's no story behind it. And this is why I always talk about there's just, whether it's bullish or bearish, whatever the headline is, there must always be a headline. And in my opinion, okay, sure, you see the candle, you see the pop. But in my opinion, this was Asian session, pre-market, no volume, and a huge overreaction with no story behind it. And then what happened yesterday? We closed it. New York opened right away, and they're like, no, we don't believe in this overreaction. There's no narrative, no story. There's no algos printing the volume either. It was just on some insider decided to overbid the market. Could have been closing his shorts, long covering, as you would say. So maybe there was no selling. Maybe it was just, the major player covering the longs and squeezing out the shorts. And what happened? We closed this entire move.
Actually, this setup itself can be used as a textbook strategy. If you just screenshot it, no news, no volume, Asia session. And then if you have this narrow range at the top of the move that goes nowhere and it basically just hovers along, as it was the case here, and then it took out the Asia high like 2 times, right?
Yeah.
And it's also a really common theme. So, and if you would like screenshot this and you would just put it on a wall and you would only trade this, I can tell you it's a valid strategy, but like backtested it, right? Just like 400 times, and you will see it has an edge to it. And this is what I meant in the beginning. You can trade so many different things. You just need to be aware that there are 1,000 things you can trade upon. You just need to backtest them and to see is there an edge attached to it, and then just like really basically pattern recognition, copy and paste, right?
Yeah, exactly. Yeah, and in this pattern doesn't happen too often. And I also posted a little mean reversion idea on X the other day. Doesn't happen too often, Henry. I'm trading the mean reversion, but when I zoomed out, I was still on the right side of the trend. I picked up some points on, you would say, intraday reversal, but when you zoom out to 48 hours, I was still holding on the trend of this gap up during pre-market. And yeah, it was just very interesting price action. Take a screenshot, you guys. Doesn't happen too often, but No fresh news, no fresh macro news. Sorry, the index sold off. Completely filled it within half an hour. People yesterday posted crazy. Oh, so much volatility. What is happening? Zoom out, you guys, and look what happened yesterday. There's a reason why the market moved so quickly. New York opened up, saw the big imbalance, and what does the market do on not only the long-term basis but also the short-term basis? You see it all the time happening intraday. The market hates gaps. They hate the imbalance in markets, and they just love to get filled. So yeah, I measured it up, and that was my idea for yesterday, and that's also the idea of today's impulse level of the day, which came actually from Wednesday, 29,510. Marked it up. We came down, held it as support, retested it during, but then we're testing it again during Asian market. Asian market doesn't matter too much. There's no volume, slid through, came back, retested during the London session. It's coming in as resistance. And now what are we seeing on the present market? We are seeing it as resistance. So now what do? I look into the risk to the downside. We are below this level. So now let's zoom out even more. And what I want to look for is a strong New York open. And look what we have here. We have a New York open from Thursday, June 11th, right around 29,052 level. And this is my risk to the downside if I'm looking for short opportunities. And we continue the trend. And let's just measure it up and look at our risk to the upside. Because we're intraday traders, you guys. We're not only looking for short ideas, but also long ideas. If the opportunity presents itself, let's just measure it up. This being the pivot to pivot range of the day. It doesn't, match up directly to the open of New York for Thursday, but it's no surprise because the impulse was just so big middle of the week. So we'll just mark this up. 29,971 as our risk to the upside. And so far what I'm seeing is NASDAQ is the weakest of the pair, weakest of all indices. And like this. And and also the reason why I didn't mark up the other three, because the other three are quite neutral. If you look at my ratio charts, I have the daily open, and this is NASDAQ's ratio compared to other indices. And because the downtrend is so strong with NASDAQ, with all other indices, Dow Jones, ES, and Russell 2000, that's why I've marked up NASDAQ being the weakest in the rotation segment, and the other three are quite neutral. So I don't have those on the list yet because I need to see more of a spread, a stronger divergence. And because I'm not so sure on that, I'll keep it empty for now and just kind of wait and see how market flows from there. So this is what we got, my friends. Keep that in mind, the 29,510. If NASDAQ continues the trend lower, then I'm possibly looking for the next pivot below. And let's just see. We already took out the lows from there. Just wait 1 second. Just want to check something. Still neutral. And when I don't see a clear trend or any sort of spread, I just stay away, you guys. I set my alerts. I always time what I like to do is I don't look at like the kind of closure so much, but more of like the 15-minute time frame where if I don't see anything clear, Henry, I set a timer and I step away from the desk for 15 minutes. Go outside, take a walk, grab a coffee, and then I come back. I think that's really smart because if you're still staring at the charts and you feel like, okay, there's no trend, there's no setup, then your mind can play games on you. And maybe in a few minutes, something starts to happen. You're like, oh, maybe I should put some risk on Dow Jones or the ES, or maybe I should. No, set a timer. For me, that 15 minutes has always helped out. Step away, come back and see if things have changed or if your setup looks more clear.
There's always one thing I used to do is I basically had a rule that I needed to wait for our 30 minutes candle to close. So I had back in the day, right? So I was like, I don't know, nothing happened. I was like, okay, nothing happened. So I was like, all right, I need to step away. Basically, as you said, timer, just not to forget the time, and just stepped out from the computer, right? Went to the fresh air, grabbed a coffee, So just stepped away, waited for half a candle, especially after the US Open. Like so many times, it's really nothing is going on for the first 30 minutes, or not a clear picture, and sometimes even for the first hour, right? And I was like, okay, still don't see anything. Market is still within its range, not a place to be in for my strategy.
Yeah.
So I was like, all right, it's better safe than sorry, right?
Yeah, of course. And he makes a good point there where, a lot of times the first 15, 30 minutes, nothing has happened. And look where we are, my friends. We are still in the same range as we were in the last hour. New York is open and nothing has happened. And you might think, oh, Steve Henry, how about the other day? Why did we have that major impulse to downside? Well, look what happened in the pre-market session on the gap close. There's always a reason for markets why they fall so sharply and why they are trending, and why they are ranging. We have no reason to sharply move to the upside or downside currently right now in the current state. But in yesterday's state, there was a clear reason, and not clear reason, but it clearly paints the picture why the market was in such a rush to close the gap on the no news impulse. And that's also the reason why I have that mapped out, 29,510. And I wouldn't be surprised if we range in this area for the next 30 to 60 minutes either, because the market made its move. Now it needs more time to consolidate, because that's what the market's not always going to be impulsing to one direction or the other. It needs to consolidate, it needs to fill those orders and wait either for I'm not saying it needs to wait for a headline, it just needs to wait for clear indication of which area and which level it wants to move towards. So no trades for buy-in, being patient, you guys. Remember, it's Friday, call it capital preservation day. It's always a good time to reduce. I'm not saying not to trade at all. I don't believe in that. Still take on the trade, but if you feel like you had a good week, or even let's say you had a bad week, just lower your risk, cut it in half, take the same setup, and see how it plays.
And I think this is actually also one of the biggest reasons why many people are not able to make it as a full-time traders from home, right? Because they have the feeling that they need to make money on every day, and then they're completely surprised if you would showcase them the P&Ls of many successful traders. And then you would see like, oh, those guys don't trade every day, don't make money every day, but they make money when the market has their setups and gives them the opportunity, right? And most of the time, the guys are just doing nothing, observing in the markets, maybe not in the markets, maybe just call it a day if you don't see anything, going for sports, coming back, seeing if something changes. And that's what people need to understand. But I can understand if you're starting out and you're like, I'm a full-time trader now, and you sit 12 hours in front of the computer. And then by the end of the week, you don't make any money, and you're like, okay, right now I have to make money, right? No, it's not the way. It's not how it's not how it works. It will bite you back at one point. So therefore, be patient. And my honest advice would be, most of the people would be better off if they would take 80% of the time they're trading and invest it into back testing and just trade for the other 20% of the time. And that would be like the most profitable thing they could do for their long-term career within their path to a consistent trader, right?
But that's very hard. That's very hard to be that consistent. Have that strong.
But by the end of the day, it's all a question. First of all, how hard do you want it? And it's like learning a new language, right? You can learn it for 20 years, or you can invest plenty of time and energy and learn it within half a year or a year and speed up the whole process, right?
Yeah.
And I think this is what I'm seeing all the time in trading. You would not believe me with how many traders I've been talking like so many times, and they've been in the game for 5-10 years. I'm like, what's your, I don't know, what's your MIA, MFA, what's your kind of risk parameter, stuff like that. And they're looking at me like I'm talking Chinese, right? I'm like, all right, maybe you should start looking into those kind of things that would help you along the way and improve your trading. So I think this is what I would like to see, more people being more aware of those things. And so therefore, guys, subscribe, descriptions down below. follow Steve, follow Purdia, follow myself if you'd like to, and
like this video.
Like this video. Comment for the algo. Show the algo some love, so he starts spreading his love to other people who might be interested in it. And yeah, we will see all of you next Wednesday at around either, we might spin it up a little bit. We might do it a post-bell session at 10 a.m. Eastern. But therefore, subscribe to the channel so you get a notification once we go live. And yeah, everyone, see you on next Wednesday.
Yeah, thank you, everyone.
Have a good
Happy Friday and have a good weekend. Yeah.
Yeah, Steve, thanks again for your time. Really appreciate it. And everyone, trade safely. Only do the things you know that you're capable of, and don't over leverage. Proper position sizing, proper risk management.
Yeah. And well, my tennis coach always said, never do the things you don't know. Only work on your strengths. And that's what I learned.
No, but that's, I mean, it's true, right? Because sometimes you're like, oh, that's a short, and you take the short, and you don't have a setup. You don't have you never back tested it. You're basically just pulling it out of thin air. Maybe another additional advice here, guys. If you want to trade those kind of things, open yourself a demo account, a simulated account, trade those things on the side, track them. And so you only have one account where you trade the things you know and test it. And the other account is basically for experimentation and fooling around, right? And then, but also document both of them, and then you can compare. And screenshot, notes, those kind of things.
Yeah, I like the bonus tip.
All right, everyone, have a good weekend. And yeah, see you soon next Wednesday.